Hi, this is Steve Hutchinson with Hutchinson Family Offices with our monthly video update. And of course, this is the last one of the year. Before we get started into it, I want to wish everyone a tremendous Christmas. And I hope that your new year moving into 2017 is the best and all you expect. Briefly, we're going to go through a couple points. The financial markets continue to respond favorably. We're starting to see strength in the earnings. We're also expecting by the time we move into January, we'll probably see a little stronger corporate earnings as the consumer has definitely put both feet back into the economy. Next, we're seeing interest rates. In the next week or so, from the filming of this video, we expect the Federal Reserve to start increasing its policy for interest rates. We expect to see about a quarter-point increase. We probably will see one 2 or 3 times during the year, and I'll discuss that a little bit later in the video. The economy continues to perform well. We saw 3.9% on GDP come in, very strong, much better than expected. Of course, that will be revised. We don't know whether up or down it will be, but we're starting to see the economy strengthen, and that is positive. And a lot of that's directly related to the strength in corporate earnings. So that does bode well for 2017. Now, interestingly enough, the populist push across the country that was started with Brexit carried over to our elections and now has moved into Europe. The euro is continuing to lose strength against the dollar. This is very positive for our exports as our exports become more affordable in the European economy. And bottom line is this should bode well. We're starting to see strength in oil prices. Oil prices are very important to this country as we have a tremendous oil industry, and higher oil prices support the expansion of that area. Now, what I've done is I've kind of put together my 2017 Santa Claus wish list. And it's a wish list. Let's just go right through it. This is exactly what it is. But it's some things that I think that are realistic. And I believe that when we take a good look at where we are today and what we look forward to in 2017, I think that many of these things are achievable. Now, the first thing I would like to see is stabilized Federal Reserve policy. I'd like for them to get back to being data dependent, and I'd like to see somewhere in the neighborhood of a normalized interest rate policy, somewhere in the 1 to 2.5% range. I think that'll bode well for the economy and give the consumer an opportunity to, particularly the saving consumer, to get a return on their cash. Right now, cash returns are zero. It's very, very difficult to hold cash in this particular environment. So I'd like to see the Federal Reserve get back to normalization. I definitely believe that we could see 22,000 on the Dow, although that sounds like a big number. That's 10% higher than where we are right now. I do believe that corporate earnings with a lower tax structure, if that does come about, we could see stronger earnings in the market. But I want to shelter that just a little bit, or caution you and reiterate that we're still looking at a bull market that is very long in the tooth, and there could be something that outside the financials, outside of what goes on in Congress, we actually see a pullback or the end of the bull market. But those are what we call black swan events. We really don't have any control over that. We just have to manage accordingly. I want to see the economy continue to strength. The quarterly GDP number that came out just a few weeks ago at 3.9, I want to see that grow. And what I would like to see is somewhere between a 4 and 5% GDP. I'd like to be sitting in front of this camera this time next year saying, wow, we got a 4 to 5% GDP. I just think that that's going to be good. That's going to increase jobs. We're going to see the labor participation rate change dramatically in favor of the worker. I think all these things are very, very important. And finally, I'd like to see some tax policy. You know, it's interesting how our country operates. Being the world's currency, we use our tax code not to raise revenue as much as it is to encourage or punish certain types of behavior. I would like to see us move into 2017 encouraging investment in our communities. I'd like to see us move in and see that, I'd like to see the trade deficit pull back from its $800 billion number down to around 6, even 4 would be awesome. That would be that much more that our country was producing than it's importing. There are so many things that we have an opportunity to do to improve. But that'll do it for this month's video. I want to wish everyone a tremendous Christmas. I want to thank all of you for all the support that you've given us during the year. And again, spend some time with your financial advisor, discuss in detail what your goals and objectives are. And as you look forward to 2017, let's all have a great year, and thank you very much.